Hello, welcome to another Wednesday um, live on YouTube. We're going to dive right in. Today, we're going to be talking about 15 ways to get business credit, loans, and credit lines for real estate investing. All right. Um, it's a beautiful day out here, and I like being outside and stuff. So let's go ahead and dive on in. 15 ways to get business credit, loans, and credit lines for business investing. My name is Noel A. Booker Sr. I am the business credit advisor for Business Credit Builder.us. Um, so today we're going to be talking about real estate investing, right? And how to get money for real estate investors. Okay, so real estate as an investment. Okay, there's nothing new about this. Okay, um, real estate investing has been around for thousands of years. It predates stock markets and other methods of training and valuing wealth. Um, Land used to be the best sign of anyone's wealth. Why? Because land is permanent. There's a limited supply of land. Okay. So while renting out real estate investments remains a popular way to profit from land and building, the real money and real numbers are in flipping. And I'm going to show you this program that I love about flipping houses. Okay, buying low and selling high in rapidly changing markets and fixing up rehabs for profits is all the rage. So everybody knows that stuff. That's nothing new. Making money off of real estate. According to Real Estate Wealth Network, 2016 was a banner year for flipping in the United States. 6.6% of all single family condo and home sales were flips. Turning to business credit to flip money, to flip is a smart business choice. Okay. Um, and you might be tempted to try a traditional lender or credit provider like a bank or a credit union. Well, when I ask people where you're going to get money for your business, and most of the time people say they're going to get it from the bank. Okay. Now, credit unions and commercial lenders like banks will most likely not loan to you unless your credit is impeccable and you have been in business for a long time. Why? Because real estate and other financial industries are considered high risk. The Small Business Administration does not actually loan money. Instead, they set loan guidelines because the SBA guarantees these loans rates are more favorable and terms are more flexible. The SBA says real estate investing is too risky for them. Now, let me add this about SBAs. You can hear, I'm outside. You can hear the bus riding by, right? Okay. Um, SBAs. Now, if you go to a commercial bank, they will offer you an SBA loan because the SBA is going to guarantee those funds, 90% of those funds. Um, and so they are able to give you a lot of money through the SBAs with low interest rates and spread it over time. So the SBA loans is the best deal for you if you could qualify. Okay. If you had to wait around, if you had to wait around until your bank or credit union feels comfortable enough to give you a loan or extend credit, you'd be waiting a long time. They got a lot of paperwork. You know, I got the three C's. I call it the three C's, right? Credit, collateral, and cash. If you go to a commercial bank, you need all three of those to get a business loan. All three of them. Not one, not two. You need all three of them and some more information. With business credit, you only need one of them. Okay? So a lot of people go to the banks and they get denied, but I'm here to give you other opportunities, other options to think about to get money for your business. Okay? Banks and credit unions, banks and credit unions will turn you down. So I'm gonna give you options. So when the banks say no, there's other people that will say yes. Okay. See, it's not that there's not money out there for businesses. We just don't know how to apply for them. We just don't know where they are. We don't know how to build business credit, the steps needed to build business credit, to put you in put your business in a position to be able to qualify for these funds. Okay. According to the Department of Revenue, 98.2% of all 2015 business loans and credit lines came from sources other than traditional banks and credit unions. Okay, so where do they come from then? If they don't come from the bank, it's alternative lending sources, which I'm going to discuss more in detail in this broadcast. All right, it's a beautiful Wednesday out here. By the way, we do these live YouTube broadcasts every Wednesday at about 1 o'clock. On Tuesdays, we do a live Facebook. Okay, business credit, businesscreditbuilder.us. You can check us out. Go to the website. Go to your social media choice. Okay, okay. Here we go. So now, how can we help? Now, when I build business credit for myself and my clients, I use a program called the Business Finance Suite. Okay. So with the Business Finance Suite, we build your business credit step by step. We're going to be there right there with you every step of the way. We're going to show you how to build business credit. On top of that, we have relationships with over thousands of legitimate types of lending programs that are available today, offering funding through hundreds of investors and lenders through a multitude of different funding programs. Okay. And this is what's hard to find is a place that's going to build your credit and link you with the lenders all in one place. Okay. So we know what you need to succeed and grow your business and get access to funding. Now, let me say this too, that I don't do this so I can teach you how to go get money fast. I teach you how to build your business to be a healthy business so that when you need access to funding, you have access to it. Okay, not that now you need money and you're running around trying to get it, because now you're running around doing inquiries on your credit, and after you get two inquiries within the 6 month period, your chances of getting money diminishes dramatically. Okay, so that's things to know about business credit. Okay, here we go. 15 ways to get business credit, loans, and credit lines for real estate investing. Okay, the most popular option that we have right now is called the unsecured credit. You can access $150,000 in unsecured credit with interest rates of 0 for the first 6 to 18 months. Okay. Unsecured credit is offered without the need of collateral or the show of assets for approval. Instead, the loan credit is based on the lender's promise to pay. The You must have a good credit for this one. You need to have at least a 680, 685, or a guarantor. Okay. So a lot of people I've seen, they'll get somebody that believes in their business idea and will offer them a piece of the business, or give them, a flat fee for using their credit to guarantee these unsecured business funds. And these are business funds that report to the business um, credit trade reporting agencies. Okay. Now, this program is perfect for high risk industries such as real estate investments. It's perfect for startups too. So even if you're a startup business with good credit, you can access these funds pretty easily. You can get credit lines to take out cash. These accounts report to the business credit reporting agencies, thereby helping you build your business credit. Okay. So in building your business credit, you have to use vendors that report to the business credit reporting agencies, and these unsecured cards, they do that for you. Okay, so they don't report to your personal card, to your personal consumer reporting agencies. They report to the business reporting agencies. Unsecured credit. Okay, startups can use it. So if you're just starting out, you can do this. Okay, you need a 680, and it funds within 2 to 3 weeks. Now, if you think you qualify for this particular program or any of the programs I'm going to tell you about, you go to my website, businesscreditbuilder.us/get funding. If you think you qualify and you do that, we have a form there, and we can find out whether or not you qualify right now for funding. Okay. Here goes another one: business revenue lending and cash advances. This is not a loan. Business revenue lending is an advance based on future sales and revenue of a business. You can get funded within 72 hours. This is an easy one. Okay. The revenue, business revenue. This is easy because if you can show that you have revenues coming in, you don't need to have credit. You don't need to have assets. You just need to show on your bank statements you got money coming in, and these are really um, easy to get into. Okay, cash flow financing. Cash flow financing is one of the most popular types of financing today. Fast and easy. All that is needed is 6 months bank statement review. Okay, this is similar to the revenue. Okay, so if you have $10,000 or more going through your bank every month, you qualify for cash flow financing, and you should go to the link I just discussed. I'm gonna say it again: cash flow financing. You can typically get approved for 10 to 12% of your annual revenue. So if your annual revenue is 600,000, you can get a loan for about $60,000. If your revenue annually is 400,000, you can get a loan for $40,000. Okay, no collateral is required. You just need to come up with those bank statements. They're going to see how where your money comes from. They're going to see how you operate your bank account, and just make sure that you can pay the loan off. Credit is usually lent to as low as 500 FICO score, and some lenders don't have any credit requirements at all. So some lenders require a little bit of credit, some not going to check at all. Okay, so in our database, we're going to come up with all these lenders that you qualify for, and we're going to tell you exactly what they need before you apply. Okay, that's the important piece here. Okay, in this whole thing, that when we help you build your business credit and we apply for loans and stuff with you, um, we already know what they required for you to get approved. We're going to let you know that. Now, if you go on your own and you ask, well, what are your requirements for me to get approved? They're going to tell you, fill out this application, and I'm going to tell you whether or not you qualify. Okay, they're not going to tell you. Don't have to. Okay. Um, so that's one thing about working with business credit builder, is that we have access to the underwriting guidelines before you apply. So you get automatic approvals. That's what we teach you how to do. Okay, more about cash flow financing. Typically, you need to be in business for at least 1 year. Monthly revenues 10,000. You will need to have more than 10 deposits monthly. You need you need a positive cash balance at the end of each statement. Okay, so each month they want to see that you have more deposits than withdrawals. Um, they want to see that you have a number of deposits. Okay, so they want to see that you have a consistent flow of deposits coming into your bank. Okay. Okay. Once you have paid back half of your loan, you will be offered another loan. Okay. The terms will be longer. The rates will be lower. See, they want to see that you can actually make the payment. So once they do, they're gonna offer you a better situation. They want to keep you as a paying customer. So they're gonna offer you more money. Once you pay off half of it in good terms, they're gonna offer you to pay that bill off, pay that loan off, get another loan, and have lower payments and extend it out. Make it a better deal for you to have access to the money. And that's what a lot of people do in these instances. Okay, they just always have access to that money whenever they need it. Okay, expensive. It's expensive, but can be as low as 8% in terms as long as 3 years. Cash flow financing. Okay, it can work for some people, may not work for others. Okay, now of all of these that I'm discussing with you, if you don't qualify for, by the end of this, I'm gonna give you something that you could qualify for even if you have bad personal credit, even if you don't have any cash flow, even if you don't have any collateral. All right. All right. So 70% of funded customers come back and get more money with these cash flow financing situations. Okay. Merchant cash advances, similar to cash flow financing, but only credit card deposits are counted. Qualifications tend to be easier. You only need 5,000 in deposits to qualify and only 6 months of business be in business. Okay, so this is merchant cash advances. The merchant cash advances is for businesses that accept credit cards regularly for their business. Okay, this is how they get paid, through credit card payments. Okay, so that bank account that these deposits are going into, that's what they are interested in seeing. They want to see the bank statements for that account where these electronic deposits are coming in. They want to see that it's regular deposits. The requirements are not as strenuous for these type of loans. Um, so you only need $5,000 in deposits per month for this, and you know you just need to be in business for 6 months. Most other cash flow type of situations, they require you to be in business for a year. So the merchant cash advances is a little bit easier to qualify for, and it may be for you, it may not be for you. Okay. Okay. Securities-based line of credit. This is for stocks and bonds. So if you or somebody that you know has stocks and bonds, you can use the value of these stocks and bonds as collateral for loans, business loans. You can use them as collateral to get business credit. Rates usually are less than 5%. Now, these are low risk to the bank because now they have something that they can, if it defaults, they have something that they can get their money back. Okay. So the stocks and bonds stays intact. If it generates interest, they continue to generate interest. It stays as it is. Just the value of the stock is used as collateral. Okay. Um, no cash flow or consumer credit scores are required. So that makes it a good situation right there. Okay. You don't need bank statements or tax returns for approval. You will still earn interest on the stocks and bonds you have. You can use the stocks and bonds that you currently own as leverage to get business financing. Okay, so the stocks that you currently own, you can use. You can borrow up to 90% of the value of your stocks. You can continue to earn interest on any stocks pledged as collateral. Funding takes about 3 weeks for this. Okay, so get going. All right, here's the next one: 401k financing. Okay, so you can use your existing 401k or IRA as collateral for business financing. The IRS proven strategies with no tax penalties. You can still earn interest, pay low rates, as low as 5%, just like the stocks and bonds. These are also low risk, so you're going to get good rates. Okay, fund in less than 3 weeks, get up to 100% of what you can roll over in your 401k. So whatever you can roll over in your 401k, you can get funding for your business. Okay. Um, and with this idea about the 401k is that you're taking money that you're making, you go to work, you make some money, and each time you make some money, you're going to give it to your 401k. They turn around and take that same money and they give it to companies. So they're investing in companies, right? So my thing about this is if you have a good idea, if you have a company, why not take the money that you're already helping other businesses and take the value of that money and help run your business? How about that? Instead of that money, well, actually, at the same time, you're helping that business and you're helping your business at the same time. No penalties. You just pay it off and no harm, no foul. Okay, accounts receivable. They also call this factoring. Okay, accounts receivable financing factoring is ideal for any business which receives orders and is not paid until weeks or months later. Okay, so some businesses they have to do a service or something and they're not paid until up to 90 days later, 30 days later. So in these situations, these businesses, they still are stacked for cash. They still have to operate. They still have to pay their salaries to make these services happen. So these are good for like people that got government contracts. You know they're not going to get their check for 90 days. But the thing is, you know they're going to get their check. Okay. So this is low risk to them, low risk investing. Okay. So, like another company that is good for this is freight companies, right? You might do a load with a truck. You're not going to get paid until about 30 days. So why not get paid tomorrow for that load? And that's how they do it. So you get paid for your load the next day. That way you're able to pay your truck drivers and the gas and all that stuff. And it's a win-win. You get your money early. Okay. With accounts receivable financing, you can get up to 80% of your receivables advanced to you within 24 hours. Use our outstanding accounts receivable. Use your outstanding accounts receivable for financing. Get as much as 80% of your receivable advanced to you in less than 24 hours. The remainder of the accounts receivable will be released once the invoice is paid in full. Okay. Closing takes about 2 weeks, about 2 to 3 weeks, and the rates are as low as 1.33. That's real low. Okay, so um, it has to be either like a government contract or a well-known company that you're going to be doing business with for them to take on these factoring accounts. Okay, all right. Okay, here goes the house flipper financing. It's getting warm out here, or am I just talking too much? Okay, house flipper financing. Flipper financing is the program I was talking to you about earlier. I love this for real estate investors. If you flip houses, if you can prove that you flip houses, this is the best thing popping right now. You get 100% financing you may need to purchase and rehab a residential property. What? You can you can usually get a 6 month term and an extension when needed. Rates are about 8% or higher. Okay. So what this means for a flipper is, so you got a property you're getting ready that you want to invest in, you want to flip it. They're going to give you the purchase price to buy the property, the rehab costs. They're going to give you the value of the house after you have bought it and rehabbed it before you buy it. Okay, so they're going to let you buy it. Okay, they're going to give you drawers based on the completion of the rehab, and it's a win-win for flippers. Okay, best situation going for flippers. The real estate industry, this is the move right here. The house flipper program. Okay, if you think that you qualify, you go to the website and you go businesscreditbuilder.us/get funding, and we will be able to take your questions on that website and immediately get back to you and let you know if you qualify. Okay. You will need a 660 FICO score for approval for this one. Okay. 660. That's like an average score. Okay. Lenders will want you to have flipping experience. You need to be able to show them that you have flipped a couple houses within the last 3 months. You will need to put cash in an escrow for this. Okay. So this is normal stuff in the real estate. So you got to have a little bit of money. You got to have average credit for this flipper program. But it's a win-win. You get your money before you even flip it. Okay, so that's a real good deal. The property is used as collateral. Okay, so that's why you get good competitive rates, about 9%. That's a good competitive rate. Funds in a reseller program are available for residential purchase and renovation projects. Most traditional banks and credit unions will not approve. They don't do this one right here. Okay. You can't go to the bank and get this. Okay. You have to get this from alternative lending sources. Okay. Authorized funds are held in escrow and released in drawers as the contractors complete renovation. Boom. Okay. Now, some of these that I just mentioned, you need to have credit. You need to have some kind of collateral. You need to have some kind of cash flow. Now we're going to talk about when you don't have all of that, what do you do? There is still hope, okay? Because now you use your business credit, okay? Business credit is real. Hashtag business credit is real, okay? Okay, what is business credit? Okay, business credit. Business credit is credit that you can build for in the business name. It is linked to your EIN number and not your social security number, okay? Um, so when you have business credit, um, you get to qualify for different types of credit to help grow and start your business. Okay. The first credit is vendor credit. I like to call this net 30. These are net 30 accounts. And this is how you start building your business credit using vendor credit. There are companies out there that will give your company, if it's brand new, if you have bad personal credit, they will give your company credit even if you don't have credit. Okay. A lot of these, the only thing that you need is to have an EIN number and your telephone is listed with the 411. Easy. Okay. The hard part is it's hard to find these vendors because these vendors have to give you a net 30 account and report to the business reporting agencies. Okay. Okay. So that's the key, is to get vendors that'll give you credit and report to the business credit reporting agencies. Vendor credit is often very easy to get. It establishes a relationship with your company and the vendor. You get first you get 5 credit accounts through vendor credit and get the ball rolling. Okay? So the idea here is to get 5 of these net 30 accounts. And the process is this: you get an account, they give you 30 days to pay it, you buy something on credit, you pay it within the terms, and when you pay it within the terms, they send a report to the business credit reporting agency that they report to. Dun & Bradstreet, Experian, Equifax, one of those reporting agencies. And when they send that report, that creates a trade line for your company. You need 5 trade lines. That's the first goal. First goal is to get these vendor accounts, 5 of them. Because once you get to the 5, you get to the next step. You go to the next step. Okay. And about this whole process, it's a step-by-step process, and you can't skip a step. Okay. So once you get those 5 reporting, then you start being able to qualify for revolving credit. Okay. When you start applying for revolving credit, they're different from net 30 accounts. They require that you do have credit. Okay. So they're not going to give you a revolving credit account if you don't have credit. That's why I tell you it's a step-by-step process. You can't skip a step. Okay. Okay. So trade references can give potential lenders a clearer perspective of your ability to pay back. This is important beyond the numbers. It can make it clear if you engage in risky practices. So the report that these companies send to the business credit reporting agencies, it's gonna list on the credit report that this category of business provided a certain limit. It'll tell the limit that they gave you, and it'll say they made a purchase and they paid it off in XYZ days. Okay. Whether or not it was late, early, etc. Right? That's what they do. And that's the information that is on your business credit report. Okay. So store credit, that's the revolving credit. Okay. Um, these are companies like the revolving credit companies, so companies like Lowe's, Home Depot, Shell, Amoco, Costco, Sam's, Amazon, Dell, Apple, Sprint, Verizon. Okay. These are revolving credit accounts that report to your business credit reporting agencies. Okay. Okay. So, strategy. You got to have a strategy when you build business credit. Okay. Step by step process. You cannot skip a step. The strategy comes in when you have to think about the things that you already spend for your household or for your business. Okay. And then when we get these new vendors, the net 30 accounts and the revolving accounts, that you are getting accounts that you normally would spend money on, and you would have to adjust your spending patterns to make sure that you use vendors that are reporting to the business credit reporting agencies. Okay. Remind you that the object here is to get trade trade lines listed on your business credit report. Okay. So that's the bottom line. Even if you have to buy something that you don't use, but you should be able to find something that you don't use, that you do use, and just adjust your spending patterns. That's the strategy here. It's a simple process, but you got to think just a little bit, okay? You got to think just a little bit to get it done. Okay, fleet credit. Fleet credit allows your business to maintain a fleet of vehicles, okay? Um, Fleet credit is accounts like Flying J. Um, Different petroleum companies have accounts that you can fuel up your vehicle, maintain it, repair your vehicles, get a fleet of vehicles, okay? Stuff like that. Okay, so qualifying for cash credit. Okay, now I told you about the net 30 accounts and I told you about the revolving accounts, right? So when you get to revolving accounts, your idea is now to get up to 10 trade lines. Your first goal was 5 trade lines with the net 30s. Then when you get the revolving, your goal is 10 trade lines. You get to 10 trade lines. One of these, um, okay, once you get to 10 trade lines, you will you will attempt to get one of these accounts, one of the revolving accounts, with a limit up to 10,000. So how you do that is when you pick a vendor, like say Home Depot, for instance. You'll use that vendor and you'll use them again. And when you use them, you'll call them back and say, I would like to increase my credit limits. Okay. So the idea is to get the 10 trade lines and one of those trade lines with a high limit of 10,000. Because once you get 10 trade lines and one with the high limit of trade of 10,000, now you can get these Visa, MasterCard, Amex that report to the business credit reporting agencies and will match your highest limit credit available to you. Okay, so you should have one of those limits up to 10,000. So now you have access to 4 or 5 credit cards with $10,000 on them. So for some businesses, that's all they need to get their business going. Have access to 10 to 40 to $50,000. That's all they may need to have access to um, gas for their cars. That may be all they need. Okay, so it gives you some options here. Okay, so you get up to 10 trade lines. You don't, and when you get up to this point, you have not used your social security number, not one time. Okay, there's no credit check, there's no personal guarantor, and all this process that I'm talking to you about, you can do all this based on your EIN number alone. All right. Business credit cards. Business credit cards are another funding option. Some are linked to your personal and your business credit scores, like personal credit cards. Business credit cards must be paid off in a timely manner. Okay, so here we go. Business credit cards. When you go on it for your own, you're gonna find bunches of credit cards that say that they are business credit cards, but they actually reporting to your personal. So you have to find, it's hard to find the ones that just report to your business. That's the ones that you want because you want to keep your business separate from your personal. um so these credit cards, there will be a place for you to put your social. You leave that blank and you put in the place to put your EIN number, and what that does is force them to only look at your business credit report. Okay, so they're going to take a look at your business credit report. They're going to see, oh wow, good payment history here, good payment history. They got 10 trade lines. Boom. You will be approved just based on the merit of your business um, payment capacity already. Okay. They don't need to see your personal when they see this good business credit profile. Okay. And they will look at your business credit profile. Anytime you say that you're a business, they will look at it. If you say that you're a business and you give them your personal, they will look at both your personal credit and your business credit. And that's where a lot of businesses make mistakes, is allowing them access to their personal credit, where you are personally guaranteeing this money. Okay. um it's real. Hashtag business credit is real. Okay. Okay, so business credit lines. Okay, this is another option. As a business credit line offers from a business credit card because it is more like a debit card. You can take cash out. Okay, now the credit lines, they give you a limit. They give you a limit of credit, right? Now you're only going to pay interest on the portion that you use. Okay, you can take it out. You can take it out of the ATM, out the bank. You can make purchases with it, but you will only pay for what you use. These are good options for companies for their operational expenses and stuff. Okay, so you can borrow up to a certain limit, and you can only pay interest on the amount that you borrow. You can draw and repay funds as long as you don't exceed the credit limit. Okay, and once you use this account, you use it, you use some money, you pay on it, they'll increase it also. Okay. Okay. A business line is for several purposes. Business loans are generally for specific purposes. Okay. So when you get a business loan, they usually specify what you have to pay for. You're saying, well, I need money for such and such. Okay. Well, you find a place that gives you money for such and such. But with credit lines, you can use it for whatever you want to use it for. That's one good thing about credit lines. They look for good credit and financials that show a profit in some form or fashion. Okay. Um, we have a program that called, and it has an average credit of, you need an average credit of 650 to 660 and a 10% escrow until the deal funds. 50 days it usually takes to fund, and they call this the 90-10 program. It's a basically decent program. Okay. Our last option here is the crowdfunding. A lot of people know about crowdfunding, um, Kickstarter, Indiegogo, websites like that, where um, people access money through groups of people that give them small pieces of money, and you don't get it like from one big investor. Different people um, they may like your idea and want to contribute. A lot of times you have to give them, it depends. Every situation is different, but you usually have to do a proposal. You convince them that your idea is good. Like I've seen it work good for like people that's doing jewelry and stuff, where they make jewelry and you get a sample of the jewelry. You get a piece when you invest or whatever, when they get to a certain tier level or whatever. So you have to go research that Kickstarter stuff and crowdfunding. Okay. Now, credit history and credit management. With all types of credit and financing, remember, don't borrow more than you can pay back. Pay back as much as you can, as quick as you can. Keep thinking of ways to improve and increase your available business credit. You keep on trying to get your limits higher. When you have higher limits, you're more valuable. When people look at your business credit and be like, oh, wow, this person has given them X amount of business credit and that amount of business credit. Well, I can give them that amount. So the higher limits that you have, the better people look at the other vendors. They look at you, right? Okay. Request increases. Ask if they pull credit. If so, don't do it. You don't want them to pull your personal credit. Okay. Use your inquiries wisely. Remember that a lot of lenders will not lend if they see you have 2 inquiries on your credit report within a 6-month period. Okay. Personal credit versus business credit and utilization. Okay. With business credit, you can max out a Lowe's card or max out a Home Depot card and not affect your scores. Now, this is important for real estate investors because of this. If you have a Home Depot card, right, and you've got that card based on your personal credit, right? So you got your personal Home Depot card. Now, you got a job to do. and you need a good amount of stuff to buy. So, depending on the limit that you get with that card, if you use over 30% of the limit that they give you, that will pull your credit scores down. Let me give you this other example that I like to use. Say you got a brand new card, right? It's your personal card, right? Brand new. It got $1,000 on it. You got $500 in your pocket. You want to go buy a TV, right? So you say, okay, I'm gonna go buy this. I'm gonna go buy this TV on credit. I'm gonna pay it off early because I got the money in my pocket already. I'm gonna pay it off early, and the TV costs 500. My credit limit is 1,000, and I pay it off early. I would think that my credit score would go up. I got something on credit. I paid it off early. But in this situation, your credit goes down, and that's because you overutilized your credit. They really are looking for you to only use about 30% of that $1,000 they gave you. So if your TV cost $300 and you paid it off early, your credit score would go up. But if you spend $500 on that 1,000, your score will go down. They call that utilization, and utilization is 30% of your FICO score. So that's pretty significant. Next to 35% of your FICO score is for how you pay your bills. So it's almost as significant as how you pay your bills is how much you utilize your accounts. Okay? So that's a good thing. So what that means for a real estate person is if you have a business card at Home Depot, you can max that card out and it not affect your credit rating, your business credit. Okay. If you use your personal Home Depot card, your credit would be affected. But if you use your business card, you can max that card out, use it all, get paid on your job, pay the bill off, and it does not affect your credit whatsoever. If you paid it off early, it's going to help you increase your credit, right? Okay. Okay, here goes some bonuses. Grants. Okay, here goes some grant information for real estate investors. Did you know that the government hands out grants and real estate to for real estate investors? A grant is a lot like a scholarship. It's free money. You don't have to pay it back. Okay. So it's good to know the situations so that you can make sure that you put your dibs in for this free money for real estate investors. The government has a researchable database of available grants at grants.gov. Okay? When you go to grants.gov, you search under housing, homeless, infrastructure. Those are the search criteria that you use. If you use other search criteria, results. So you'll be reading and reading and then you'll think that there's nothing in here for me. But as a real estate investor, if you search these terms, housing, homeless, infrastructure, in your area, in your state, you will find things that you might be able to qualify for. Okay? And if you don't qualify for them now, you have a goal to get to. There's money out there for real estate investors in each state, municipal markets, and all that. Okay, grants usually close quickly. Many are only available for a few months. You can apply for more than one grant at a time. Fill out applications completely and as accurately as you can. So these grants, they will be posted. Like for example, there'll be a grant posted January 1st. It'll come down and be all the applications are due by February 28th. Okay, that gives you an example. So it's always good to check these because they come up, they become due, and they come down. Okay, And then they are for certain periods of times that they will cover. So there's always going to be stuff out there. Okay. Okay. Search for HUD grants at portal.hud.gov. Portal.hud.gov. Okay. There you will find grants for HUD homes. Okay. The NOFAs, NOFAs, which are notices of funding availability. They include the contact where you send your application. So you go find something that you think you want to submit an application for, and you keep mind of the NOFAs where you send your application into. Okay. If you apply for more than one HUD grant, it must be on separate NOFAs. Okay. That's the information you need to know. Your state and local government might provide grants for housing, offer a partnership to your state, city, or town. Ask for local support for your project. Most municipalities want neighborhoods to be rehabbed so property values will rise. So these communities, they want them to be rehabbed. They want to maintain them so that their property levels will go up, right? So they will have situations. The municipalities in those areas will have contracts for you to maintain and upgrade the areas. Okay. Okay. What else we got? Somebody coming up on my driveway here. Okay. A grant requires a grant proposal. They are a lot of business. They need a lot of they need a business plan. Okay. Um, the local address is usually a bonus when applying for grants. They want to know that the area that you want to rehab, that you actually live in that area too, because they're looking to improve our communities, so they want to do business with people in those communities as well. Write a clear and concise cover letter. Check delivery requirements, mail or in person, and follow them to the letter. You have to follow the instructions very clearly. This is regular information. This stuff but sometimes you have to be reminded or just pushed in the right direction, right? Okay, here's a quick summary. We talked about unsecured credit, revenue lending, cash flow funding, merchant cash advances, security-based financing, 401k securities, accounts receivable financing, house flipper financing, vendor credit, store credit, fleet credit, cash credit, business credit cards, business credit lines, grants. Now, if you think you may qualify for any of these, then what you would do is go to business credit. If you think that you will benefit from any of these products that I discussed, you should schedule a free business credit consultation at businesscreditbuilder.us/consult. You will get a consultation with myself or one of my staff members that will talk to you about what your business needs, where you would like your business to go, and how we can help you get there. We'll talk to you about and we'll show you our business finance suite where we build your business credit step by step, very detailed instructions, and you will have help doing that. You have our staff of business credit advisors and our staff of um, finance consultants as well to guide you in applying for credit that you qualify for. Okay. Um, Keep in mind that I do these seminars every Wednesday live on YouTube, Tuesdays live on Facebook. Near you, okay? You can have me come to your locations and speak about business credit to your group of investors, or if you have financial group or something, I'll come and talk to your people. Okay, businesscreditbuilder.us. Thanks for coming out. Check us out on the social media. A lot of information out there. My next and I'll see you tomorrow. Everybody have a good day. It's a beautiful day out. Let's get it.